Well, I mean, inflation in an inflationary environment like the 1970s and today, it's going to be very, very good for commodities because you look at commodities and their price in U.S. dollars. So as U.S. dollar weakens, it's going to take more dollars to buy the same commodity.
Mm-hmm.
So it's really a natural hedge to inflation would be in the commodity space, whether it be precious metals, same thing for real estate, art, those type of things all perform well in an inflationary environment.
All right, everybody, welcome back to the Richer Geek Podcast. Today, we're happy to have Max Porterfield. Max is the CEO, president, and director of Callinex Mines. And what we're going to talk about today is just a little bit about the economy, supply chain, what they're doing, and how the world is reacting to mines and what it is that he's seeing in the macro and microeconomics of the whole system and the business. And I think it'll be very interesting for our listeners to have what Max says. How you doing, Max?
I'm doing great. Really excited to be here today.
So Callinex Mines is a Canadian mining company that goes back a long time, from the 1920s, I think I read. How are you guys seeing you guys? We talked a little bit about you guys are in the copper right now. Tell us kind of how Callinex is doing, and what they're doing right now and what your plans are.
Yeah, so we're an exploration stage company. There's three phases in the mining business. There's exploration, development, and actual production side of the equation. Really where you can make a lot of money, the most money in the industry or the sector is within exploration, because that's similar to a biotech company. A biotech company is doing research and development per se, or any kind of tech company is de-risking through their research and development arm. Mm-hmm. And then as you hit different milestones and de-risk the asset or the drug per se through clinical trials, you add value to your shareholder base, and then the company's valuation will increase in lockstep. And so what Callinex is focused on is in the copper space on just base and precious metals mines. They're VMS mines, what they're kind of a nickname for them for volcanogenic massive sulfide. But it's quite simply, we're in the copper business. We're exploring for base and precious metals. At a key time for the supply demand are really favoring higher prices, which is going to benefit us. And so what Callinex has done is it's hit a very high grade copper discovery in northern Manitoba, where we have a long history. At a key time for the community, the flagship mine shutting down in May of this year. This is also on the backdrop, kind of on the global supply crunch for copper. That's not just driven by kind of COVID-related supply chain problems, but really a lack of investment over the past decade, if not longer, for these base metal mines, because they're very, very difficult to find. They're challenging, mm-hmm. and that's really where the reward is. Mm-hmm. So that's what we're focused on, kind of bigger picture.
Now, I can't imagine what goes into digging a hole that big and trying to find copper. I mean, it has to be, what we're thinking about with our, research and development, but just the equipment and the manpower. I mean, how long does it usually take? You have something and now you have to explore in hopes of finding it. I mean, that has to be just a huge undertaking.
I mean, there's a lot of thought process that goes into targeting and exploration. So, our version of clinical trials and comparing to biotech stock is that we call it the truth machine in terms of drilling. And so you have a hypothesis or thesis based upon where you think the deposit would sit in 3D space underground, and then you ultimately test that hypothesis through drilling. So we drill a hole about 2.5 inches in diameter to test different target areas. And once you're successful and you hit a discovery, which is the first step in the long process, then you start delineating the deposit with step-out drilling, where you essentially move out 50, 100 meters, 75 meters away from where you previously drilled, put another hole, and you delineate a deposit that way. So that's where we are. But in terms of timelines, a lot of people don't appreciate the copper supply chain. And in the copper business, the timeline from a discovery hole to production is on average 7 years. So say you make a discovery, which is very challenging to do, there's still a long road ahead till that actually hits the supply chain. which is, I think, what the world doesn't truly understand right now. Government policies put in place this big shift away from the hydrocarbon, oil and gas.
Yeah.
And that can only be replaced by really one thing, and that's metals. And base metals are really key to electric vehicle revolution. If you look at some of these SUVs that are from an EV vehicle, you're talking 150 pounds of copper.
Wow.
So this is all being, government policies putting in place mandates that all vehicles need to be electric by certain time frames, which is going to put in a huge demand driver on the demand side at a time where you've got a really limited supply. Now, we're looking to kind of shorten that gap with our discovery at Rainbow, because it's located in proximity to infrastructure at a key time where that infrastructure is due to sit idle, with the 777 mine that's operating the town of, it's called Flin Flon, Manitoba, is shutting down in this May of this year. So what we're looking to achieve is obviously going to accelerate that timeline from the typical, 7 years to a few years, because you're in proximity to infrastructure, power, water, road access, and all those type of things really reduce your timelines. But that's just kind of bigger picture in terms of the supply challenges in the metals market that people don't really readily appreciate.
Yeah, because I think you were talking earlier that there's only 3 days supply.
Yeah, right now it's incredible. The supply, above ground inventories in the LME, just over 3 days supply. So it's very, very tight supply. But at the same time, demand's just not going to fall off. Demand's only getting stronger, and that's government policy. We just talked about EV, but there's all the infrastructure around specifically just electric vehicles and how you're going to charge them with super chargers and what have you. All are huge consumptions of metals. And then broader picture, U.S. infrastructure, global infrastructure, the One Belt, One Road initiative out of China is an infrastructure plan that really dwarfs anything that they talk about in the United States, if you can imagine that. And all these are going to put big demand on base metals. And so you're really having a flurry of activity in terms of where is the world going to supply this? Because in the copper space, for example, since we're on we're obviously have a high grade copper discovery, the global average grade of copper mined globally is 0.5%. And that's from these big low grade open pit operations, like in Chile, Peru, Arizona as well, is a big producer of copper in the United States. And these big low-grade deposits oftentimes may not have the cleanest energy source that's generating the production of those metals. So that calls into question when you go and buy your Tesla EV or any other EV or battery-powered small appliance or what have you, is how clean is it really for the environment when you don't take into account really further down the supply chain? And so that's where we're looking to stand out with what we've discovered. It's called the Rainbow deposit. It's one of the highest grade copper deposits discovered in North America more recently, and truly on a global basis, based upon drilling to date. To be in the top 10 highest grade copper mines, for example, you need to have just over 3.75% copper. And if you look at the supply for those, or where those mines are located, a large number of those top 10 mines in terms of grade around the world are in Central Africa, like the DRC. So, what we have is a very, very high grade copper discovery in a safe jurisdiction at a really critical time for a community. And we also benefit from hydroelectric power. So that's where you're going to really get clean copper concentrate that'll really meet the long-term objectives of these economies and really the government policy that's being put in place to move away from the hydrocarbon is with a kind of a clean copper concentrate. So it's not just how it's sourced, but what are the grades of the mines and what is the energy power that's being powered or generated to power the production of these critical metals to shift the world into this kind of cleaner area.
How are you dealing, or is there any, political ramifications? Seems like all these people that want EVs and they want the cleaner cars. I have a Tesla X, so I don't know how many pounds of copper I have. Hopefully it's good. But it seems like the same people that are wanting all these EVs are also partially against mining.
Well, there's going to be a bit of a revolution with the miners here, because you can't have both, one without the other.
Right.
And so you're right. You're absolutely. I think what the mining companies need to do a better job of is obviously ESG, and environmentally sustainable growth in the mining industry, and that's one of the things that you're seeing that's becoming a bigger talking point and action point, really from the producers, all the way down to the explorers like ourselves, in terms of what we're onto and what we really, our long-term vision has been to this. So the world just kind of come into our favor, so to speak, because this has been a long-term objective. It's not something that we just suddenly thought it was a good idea. So, you're right. You need to have a critical look at your supply source and understand that if you want to have a shift away from oil and gas, you're going to have to need the metals. Because if you can physically touch it, it's either been grown, pumped, or mined. And I can tell you that your power generation from your car is not going to be grown. And even then, maybe all this deforestation associated with that. So, there's a give and take that has to be made. I think everybody understands what the long-term objectives are. And it's just about meeting those long-term objectives in a sustainable way, which is where we're looking to kind of fill that gap.
Yeah, because one thing that I remember that Elon Musk had mentioned is it's all said and good that you want all these EVs, but we don't have the electricity capabilities to put all these EVs on the road.
Yeah, and that's just the production of the EVs. Then you're looking at the electrical grid to power the EVs, and what is your base load power generation coming from in the United States? So, I think there's going to be a mix. Certainly nuclear is going to be an important role into all that in terms of clean, low-cost power generation. You also have geothermal, solar, wind. All those type of things need to kind of come together for an energy mix to create a sustainable baseload power generation source that then can supply the EVs. Because, EVs are just one thing. If you look at the small combustion motor, whether it be in a lawnmower, those type of, small motors are actually very, very big pollutants. I know the state of California, for example, is looking to do away with those, and they all need to transition to battery powered. But again, it goes back to your supply sources. And not only that, in terms of getting the supply in a sustainable way, but then where do you get that supply in a sustainable way? Understand the geopolitical risks associated with a lot of the world's mine supply.
Yeah. It's very well and good just to say, do it, like they do in California. Well, we're just going to ban all blowers, ban all gas lawnmowers, but there has to be a thought process of how are we going to do it, and what does it take to do it?
You saw something similar in the platinum arena in terms of the metal platinum. Back in the early 2000s, when all cars needed to have catalytic converters. What the world didn't realize is that every single catalytic converter has a little bit of platinum in it. And that's why oftentimes you read on the news where, thieves are going out and cutting out, the catalytic converter outside of underneath cars. And they're doing that to get that little bit of platinum. And the big demand shift that had in the platinum market, it was a really good time to be in the platinum space, because again, you had a new demand source that's been thrust upon a metal with this very finite supply. And so, you just don't just turn on the tap, so to speak, like you can in an oil and gas scenario where you have a much quicker path to production to get any one of those metals. And really the only way to solve that problem is with higher prices, because higher prices are going to incentivize the exploration and development for new mines. And so, oftentimes the cure for higher prices is higher prices. And so that's been, the case right now with copper is you have the whole world looking around for the supply constraints and pointing the finger towards the pandemic or what have you. The reality is if you look during the pandemic, mine supply in copper was about 6-7% that came off just for a number of months. I think you really need to look at the geopolitical risks associated with the supply constraints around the metal. For example, the recent elections in Chile and Peru, going to more of a socialist regime that historically has led to a lot of problems operating mines in those economies. Because again, as a socialist economy might, come in and have more demands than before, it really is going to have an impact on the operation. When it has an impact on the operation, it's going to have an impact on global mine supply, which again is very, very sensitive right now. And in general, people don't really appreciate how sensitive it truly is.
And, one of the fears might be that those type of countries that are turning more socialist might give their first batches or their first haul to like China or to Russia, and we'll say like, well, the rest of the world may not get first dibs because they're more maybe aligned with the other countries.
No, definitely. I think you need to look at supply sources. I think the Five Eyes, so to speak, when I say that, I'm talking about the US, the UK, Australia, New Zealand, Canada. are all systematically looking out and going to see where are we going to meet the supply for our economies. And in fact, I mean, in many ways, the export credit agencies for the Five Eyes are going around and looking to backstop financing for for these deposits to go into production with some security that they're going to get offtake for their economy. And so, if you look at the normal discount rate for a base metal project, you're looking at 8%, but you can go now and get 80%. Basically, a long story end of it is that you go and get a bankable feasibility study on a deposit to go into production, and the bank will give you the debt financing. It's a mix of debt and equity, obviously, for taking that deposit into production. But now these economies or these governments are going and backstopping 80% of that debt at an artificially low interest rate. So instead of 8%, you're talking 2%, which is going to obviously be a big benefit to bringing a lot of these EV-centric ESG projects online and a much more favorable financing terms than ever before. And that's really going out to secure the supply away. Because, I mean, in many ways, I think we're in a new Cold War that's taking place around the world. And the bargaining chip, as you can see, particularly with what's going on in Russia and the Ukraine right now, is in that instance is going to be the commodities. I mean, oftentimes you look at foreign policy, it's really dictated around the sourcing of some sort of commodity, whether it be oil, historically been a popular one. Natural gas is one right now. Obviously, natural gas in Europe is heavily tied to Russia. And so again, it's where do you fit in this whole game? And I like to be positioned in a safe jurisdiction, proximity infrastructure, clean power at a key time on the microeconomic level, with the town needing that discovery.
So I think what you're saying also, that which is good, that the central banking system is pro what you're doing. So there are some opportunities. They're not shutting you guys down. They're not giving you guys any high interest rates in order to make it not feasible.
Well, it's what I was, I guess, alluding to with all that is that the governments are coming around to secure supply for their economies. They're looking to backstop it at, you're basically, your debt financing is going to be backed by whatever government's giving you, export agencies giving you that line of credit. But they're wanting some surety on some level of offtake for those economies, is what I was mentioning there. And in terms of geopolitical risk, I mean, we love being an explorer, / developer, because we're moving toward and shifting towards that in tandem with our exploration efforts in an area that's produced 32 mines. So this isn't a new business in the area that we're operating in. And Canada overall is really a source for financing and really a human capital source for the exploration efforts, not just in North America, but truly on a global basis. The world does turn to Canada. Canada has historically been a leader in that sector. So it's a great jurisdiction to operate in. Obviously, everything kind of ongoing right now with the protests and how that's being handled can be looked at differently. But ultimately, you want to be in North America if you want to be anywhere, in my opinion.
Oh yeah, well, I do too.
Job creation in a country like Canada is going to be very, very key, and it also opens a lot of doors. When you're looking to create jobs for your economy at a key time for the community level, that's been a tax contributor, driver of tax revenue for the province of Manitoba and the federal government, for example, for over 100 years, to all of a sudden becoming a potential liability. When you have a solution to that problem, you're really going to stand out, and there's going to be a lot of people, waiting to help when they can.
Now, we have had 2021 especially, and it looks like it's not going to stop anytime soon. We've had the most inflationary year since probably the late 70s. How is that impacting commodities like, the copper, silver, gold, zinc? And what kind of insights can you share with us on how you think it's all going to affect those commodities?
Well, I mean, inflation in an inflationary environment like the 1970s and today, it's going to be very, very good for commodities because, you look at commodities and their price in US dollars. So as US dollar weakens, it's going to take more dollars to buy the same commodity. So it's really a natural hedge to inflation would be in the commodity space, whether it be precious metals, same thing for real estate, art, those type of things all perform well in an inflationary environment. But what's really underpinning, I think, the long-term super cycle, particularly for the base metals as well as gold and silver and the precious metals side of things, is going to be the supply side. Because it's been truly a lack of investment in the exploration of these discoveries. And you can see that through the entire, sector, whether it be, not just copper, look at gold. You've got declining grades of discoveries. The size of these discoveries are becoming smaller and more infrequent. And so you've got to look and explore in different ways. And that's really the story in Callinex's case with the Rainbow deposit, is looking at a mature mining camp, but a camp that's produced 32 mines. And, you could have a negative view on that and say, hey, all the mines have been found in this area. There's nothing to look for there. And we took a different lens and a different perspective. And we thought, there's obviously a pedigree. There's a mineral endowment potential there. And we need to look in new ways. And so, again, the only thing that's going to incentivize that's higher prices and thinking outside the box. But truly, the driver of all this is the easy discoveries have been made in many ways. Technology has not advanced as readily in the mining space as you see it advance, the amount of capital that goes into it in oil and gas per se. And that's all coming to an end here. Push comes to shove. If you need the metals, you're going to have to look for other ways and in new places, more remote, and that's all going to lead to higher costs associated with that. So, that's one of the key strategies we've employed has always been in proximity to infrastructure, where it can be obviously a much cleaner footprint, a smaller footprint, but your upfront capital costs to explore for these deposits is much, much lower cost than when you're going remote. When you're going remote, you're setting up a camp, you're taking people, water, power, helicopter access in and out, and it's just much more costly in the exploration stage as well as your development stage. If you look at a remote discovery, oftentimes the capex for these deposits are in over $1 billion capex, if not higher, to get all the people, the power, the water, all that out there to these large deposits. And so you need a sustainable long-term price move to really create the necessity and these things to come to fruition. Whereas I think the way to mitigate risk is obviously going in proximity infrastructure where you can leverage off of that, where your threshold for something to be economic is much, much lower because you don't have to rebuild all that infrastructure that was already put in place there from a previous mining operation.
How much pushback do you get, when you go and you make a discovery like with the local provinces and just trying to say, hey, we want to come out here and just do this big thing because we have this big discovery? Are you getting any pushback, from the different areas where you find these discoveries?
No, actually, that was again going back to being aligned with the microeconomic situation within these, known and established Canadian mining jurisdictions. The town of Flin Flon, where Rainbow is located, just a half-hour drive away by existing road access. We're actually within a mineral lease, so it's advanced permitting. We sit within 200 meters of a hydroelectric power line, and that flagship mine that's operated by the mid-tier company, Hud Bay, is shutting down in May of this year. So again, 2.5 months away from a firm shutdown date for a mine that's really the sole driver of the economy for the community. This is a town of 5,000 people, and there's 785 direct jobs going down to 50 by next year. And that's just direct jobs due to the mine. And of course, there's always the local economy that surrounds that anchor mine. And so again, when you have a discovery that can take the pressure off the community, because there hasn't been another discovery that's been made that's is readily in the arms waiting to go into production after 777 shuts down, really opens up a lot of doors, and it's where you get a lot of support on the community level because they understand the positive impact that you can have, and really stemming a lot of job losses that are inherent in that community, and that's what we're looking to achieve with our discovery.
What is your with this? I'm talking about Callinex. What's a comparison, or can you make one between like your market cap and your peer group companies? How are you guys? Because you're a public company. How can you prove that undervaluation?
Yeah, so in terms of valuation, there's other companies with similar assets that have market capitalizations of 150 million, 200 million, up to 500 million, depending where you look. I think one of the key things for us has been we've gotten delayed by assay results coming from the lab on the discovery of Rainbow. And we're more readily known for assets in the Maritimes that are zinc lead focused as well. So as we shift to a brand new discovery, that's where you can have the biggest revaluation for the company. I mean, today we're sitting with a market cap of roughly 30 million. And one of the key things that, I think that is going to change that in the very short term or near term is, again, being able to process additional assay results from the discovery. So assay results are essentially the laboratory results after you drill a hole. They process it and tell you exactly how much metal's in the hole that you've drilled. And that's key to delineating a deposit and then publishing a maiden resource, because we're pre-resource at Rainbow. When we entered 2021, we only had 3 holes into the discovery. It was brand new. Since that time, we've drilled over 71 holes in the deposit area. And so we're going to be publishing a maiden resource, which is going to be a key milestone for discovery as your first resource. And that's where you have a third party engineering firm, or model independently how much metal is actually in the deposit that you've drilled. And that, again, is, I think, a key milestone and catalyst where we can get a big revaluation. And that's not too far off in the distant future for the company, and something that we're working on right now with someone that we had hired to complete that work.
What is your, I know you've been with this company a little while. What's your proudest moment to date working?
Well, certainly it was the discovery of Rainbow. I mean, that's the discovery of one of the highest grade copper, deposits out there at a key time for a local community. That's been a long-term objective. That was an objective that when I joined the company and we had a big management shift at Callinex in mid 2014, was to find Flin Flon its next mine. And so to hit that discovery, and really at the height of the pandemic where there was peak amount of fear, I was certainly not living in a state of fear myself because I had an opportunity to be out there at the drill when we made that discovery. So that was the first moment, and certainly there's going to be many more new moments as we continue to hit milestones. And really 2022 is the year to publish a maiden resource on Rainbow, but also the year that we're looking to make discoveries of other deposits in the area. Because what we've done is we've taken the tool set that in kind of the mindset and the mosaic, so to speak, that we've created to find Rainbow, and we expanded that on a very large scale across our land package in a new way. So no one had ever found Rainbow or looked for a mine in that specific way in the area. That's where you got to change your mindset to change your outcome. And now that we have Rainbow and we have that as a footprint and kind of a playbook, where we expanded that playbook on the entire property area. And that's something else we're looking to achieve is Rainbow and beyond in 2022 is finding another 1 or 2 rainbows to get those into the pipeline would be, I guess, my next proudest moment that I'm looking to achieve. I don't, maybe I'm not satisfied, but certainly Rainbow and the discovery was the proudest moment to date. And as we move forward and hit different milestones, we're looking to replace that memory.
So your definition probably for like a successful year for Callinex would be not only to keep Rainbow going, but to have a couple more of these discoveries. And that would just kind of put the icing on the cake for 2022.
Absolutely. That's just reaching really critical scale, because then you have not one operation at Rainbow in Pine Bay, which is an adjacent deposit, but you're looking to add 1, 2, 3 others if everything plays out. And I think that we're going to be very, when you look at how many target areas that we had with our new approach to exploration in Manitoba, we had it down to 4 target areas, and we obviously discovered Rainbow in one of those 4 target areas. And so looking forward into 2022, we have 6 or 7 target areas. We've been outlined a few of them already to the market, and there'll be more to come. And I think we're doing that in a much more refined manner than even what was leading up to the discovery of Rainbow, right? We've taken that, and then the more data you get, just like in a biotech, the more research you get back and the further you get down your process, the more you learn and the more effective you can be at exploration. And that's what we're looking to prove and achieve this year.
How high do you think copper is going to get? Here in the United States, they're stealing copper everywhere, and they're going into homes, stealing all the copper pipes. They've even gone and with the superchargers, cut the lines of the superchargers to get the copper. Are you just seeing that in the foreseeable future, it's just going to keep going up and up and up and up because of the demand?
Yeah, again, you have to have higher copper supply prices to incentivize new supply. And I'm not the only one. I mean, Goldman Sachs, Bank of America, they're all saying the same thing in terms of their analysts looking down for the supply chain, is that you're not getting the supply response in copper. And that's really, truly unprecedented, right? And that's going back to a long-term systemic problem. Because again, when I joined Callinex in 2014, it was not sexy to be a copper explorer. It was not. You were looking at a $2 copper environment. And so you need a sustained higher price action in the underlying metal to incentivize companies like Callinex to go out there and explore for new mines. And again, you're talking a supply delay, like 7 years from a discovery to a production on average. So it's not like these are just going to turn on all of a sudden. And there's other things that go in line with that. I mean, if you're looking at deposits that are very remote, we talked about the big upfront capex that can prevent an asset from going to production. The timelines on taking a very remote asset in production as well. The risks associated with producing very, very remote. All of these type of things are going to have a big, big impact on the world, meeting the industry meeting the world's demands for the metal. And so I don't think it's going to be anything new to see the copper stolen. I mean, we saw the copper stolen during the last cycle, but this cycle has a lot more going for it, even than the previous super cycle in commodities that ended with the financial crisis in 2008, because you haven't had any investment in supply.
Yeah. Now, you joined the company in 2014, and I mean, it's got to be from where it was to where you're going now. I mean, what are some of the things, and what is it like to run a company like this?
Well, there's certainly never a dull moment. I'll tell you that. I mean, in terms of risk perspective goes, I mean, Callinex and exploration is a very, very high risk endeavor because the statistical odds of making a discovery that goes into a producing asset on an industry-wide basis is 1 in 4,000. And I think obviously that's a very high risk business, but that's why the reward is so high as well. When you make a discovery and you can delineate it, is because these mines are truly valuable. If you look at the 777 mine that's shutting down in May, that's thrown off over $1 billion in tax revenue alone. So we're talking about a big, big business, a big, big opportunity. And the way you minimize risk in a high risk environment is, again, proximity to infrastructure, the pedigree. Obviously, the infrastructure has been put in there because of the pedigree of the geology that's put in place. Other deposits have been found that have gone into production. But it's very, very exciting. I'm certainly passionate about what we do, and the whole team's passionate about what we do. I mean, it's one of the things I haven't mentioned is, my background is traditionally in finance. And so when you come into a business like Callinex, you really need to bring the technical expertise, which is one of the key things I focus on doing right out of the gate, where our technical team's actually been credited with finding 3 of the 4 largest mines in this town's history. So it's all about people at the end of the day, managing eccentric people. I mean, we've got a great team and there's an exciting business. And certainly every day there's something new that's going on that you would never have thought would imagine it would occur that happens. But then you kind of have you're constantly living on the high, so to speak, of making a discovery, because truly, I wish I had a piece of core with me right now. I'd show you. I know your listeners couldn't see what I'm describing, but when you're looking at a piece of high grade copper, I can be in a really bad mood and turn really happy in a snap of a finger.
I can't imagine, because that's the future of the company, is finding those things. What is if you could look out 5 years from now, where do you see Callinex? What's your goal?
Well, I think Callinex in this cycle is an exploration company. So more often than not, exploration companies are swallowed by larger companies that are in producers. So I think that's naturally what's going to happen to a company like Callinex, or any company that's successful in the exploration front, particularly right now, because these big producers need to backfill their mine supply, right? I mean, they're producing. That's what they're good at. Their expertise is getting the metal out of the ground and into the homes and through the supply chain. And the only way to do that is either you have to be experts at finding mines yourself, which is, again, a very specific tool set. And they do have, exploration departments at these mid-tiers and majors. But also what they look to do, and it's just natural part of the business, is the acquisition of exploration stage assets that are transitioning to be producers, where you've really got that big revaluation in your company, and then you get taken out. And so, whether Callinex sticks around and transitions to a producer is a possibility, a distinct possibility. But certainly, as the world's appetite increases and you have all these supply drivers and we have a lack of discoveries, these big producers are going to really be looking at it very aggressively in terms of, hey, how do we feed our future supply for production? Because they have their own production profiles that they've got to maintain to keep the valuations that they are at. And that's an intrinsic part of the business, is the explorers get acquired by the developers and producers, and producers go on to produce and make money in that way. And again, that's why exploration, while it's the highest risk part of the business, because you're coming from a concept and you're turning it into a proof of concept, and then as you drill it out, you show it to a reality and de-risk it that way. That's where you create the most amount of value for your shareholder base.
Well, this has been fascinating, Max. For everyone that is curious about Callinex, the website is Callinex. It's CALLINEX.ca. You can find out what kind of projects that they're doing, and they are the corporate overview if you're interested in getting involved with some of the, being an investor. But Max, it's been wonderful. Thank you so much for letting us know a little bit about what you do in this topic that is, I think, in the future going to be extremely important, because we do need copper.
No, absolutely. I really appreciate you having me. I like to say copper is the new gold. Because it is really precious. I think people don't appreciate how precious copper truly is. They call copper Dr. Copper because it's really a bellwether of the global economy. And it is showing that the economy is obviously going very, very strong right now. And no matter the case, things slow down or not, it's a very, very key metal at a very, very key time as the world shifts away from the hydrocarbon.
Yes. Well, thank you, sir. I appreciate you coming on. Have a great day.
Thanks again for having me.